So Maze, I'm hoping this is going to be the trend line for the rest of the decade, as I keep saying, but May has been a fairly busy M&A month as well. We've had one large M&A, which we will talk about, but also some smaller M&As. So Groww buying Fisdom, Imarticus buying MyCaptain, Capillary acquiring Cognitive, and then one sort of special mention, it's not an M&A, but Nestle buying a minority stake in a relatively unknown pet food company called Drools. Shocked like the ecosystem because somebody wakes up and suddenly says, who was Drools? And it's suddenly a unicorn, and Nestle picked up a small stake. So I think there are 2-3 interesting elements of it. So though it's not a M&A in a traditional sense, we thought we'd touch upon that. These are the 4 we're going to cover for the month of May. So if folks had not heard of this company called Fisdom, it was born in the mid-teens. It was actually, I haven't been in touch with Subbu, but like Subbu is my co-investor in Taxi for Sure, actually, from Besima's side. So the VC turned entrepreneur. Every cycle there are a few who do that, and one doesn't know whether it's because it's fashionable or they can raise money easily. But Subbu is like this steadfast, super serious kind of, very sincere entrepreneur who I think who wanted to make a profitable, large company. And he's been at it for almost 8-9 years. At that point, there was a wave of what were called robo-advisory companies. It was a, there's always a fad attached to these fintech companies, and that's what he was actually trying to build. And clearly, he grew into the idea once the shakeout happens and there are very few left alive, that, hey, you won't get money infinitely, let's get profitable. And that's what I'd heard secondhand from common friends of Subbu's and mine, who said, hey, he's doing a great job, he's going to get this to profitability. And here's the reward. Like Groww just bought him for $150 million in cash, at least from what we know from public reports. Groww, as you know, is like a behemoth in the space, one of the most valuable venture-backed companies, might be making a little less money on a customer basis than a Zerodha, but has more customers than a Zerodha from what the press reports suggest, and looking to be one of the big fintech IPOs this year. So, in filing for the public market, and therefore bolstering their business from stockbroking and supporting this IPO path is what they're trying to achieve. And you might think, does Fisdom achieve that for them? And we'll double click a little bit on that. I think it allows for Groww to expand into wealth management even faster and further. Fisdom seemingly had banking partnerships from what we know. This is all, of course, I have the same amount of public information that you do. I'm not an investor in Fisdom. 15 plus banks, including PNB, Indian banks, that clearly did a good job of going and getting bank partnerships. That's what Groww is probably getting. And it enhances Grow's capabilities in wealth management, complements their stockbroking services, and positions for the IPO. And from what little information we have, obviously they've obviously grown well. Fisdom has grown well for Groww to love them. But FY24 is the last set of numbers that we have from public records, which only showed an 84 crore revenue and EBITDA positive in the last quarter. Actually, the press report suggests they made a bunch of losses in FY24, but actually were breaking even towards the end. So my gut is they had a fantastic year in 25. They were showing an upward trend. Consolidation is inevitable in some spaces. We've seen PhonePe and a bunch of these guys also getting into consolidation in the space. And from what little we know, again, the Fisdom founding team and employees are operationally intact. People always wonder what happens after a merger. My gut is that they're probably the key team members inevitably will get some stock options under Groww for continuing and building the business. Whereas the founders would have, if it's an all-cash deal, some of it might be linked to performance or sustaining them for some time, but the rest of them will probably take their cash and go, especially the investors. So it looks like this is the cap table on the investor side. PayU, which is again a strategic investor for them, owned 30% of Fisdom. Kona Capital, which is a fintech-only investor, owned 13.8, almost 14%. And Sama owned another 12.5. So essentially, these three guys own 55% of the business. So if you take that on that 150 number, almost 80 plus million, give or take, is gone to these three guys. And so that seems to be, and I don't know the exact number on how much they raised, but They didn't raise much. They've been very conservative, and from what little I know, they even had enough money in the bank as they were breaking even. So which must have been the really attractive part. You can hold out for a good price when you know you're breaking even, you have money in the bank, and you don't have to sell. Right? That's when you get the best possible price, and that's essentially what Groww is shown. For people following Groww's trajectory and for following fintech as a whole, wealth management is a hot space. A lot of companies funded in the $100 to $300 million range. We had small case recently, which got around in our portfolio. Deserve, which is in our founder fund portfolio, also got like around. We know a couple more companies which are getting a lot of traction and are potentially closing around. So clearly, that is an adjacency that becomes very easy for Groww to defend towards future analysts. If it's going public, then the analysts will ask, how are you growing your core business? So they have existing verticals like payments, lending, asset management. They bought a piece of small India Bulls business in 2023. So the unicorn is trying to become a decacorn. From what we understand, they're thinking of $1 billion-ish IPO. They just filed under SEBI's confidential route, and the valuation that the bankers are talking about is 7 to 8 billion. Now, when you're at that kind of scale, then you have to justify and show how you can get to 20 billion, 25 billion. So then how do I look like a super app that can make it a much stronger pitch long-term for public market investors to hold is why I think this Fisdom deal looked very attractive, and that's what kind of closed. It becomes a full stack. Play. Groww's revenue is upwards of 3,000 crores. Fisdom, even if it had grown 50% or more, it's probably sub 150 crores from that 84 crore number. So it's less than 5% of revenue. 150 million perhaps seemed like a good price for buying a lot more strategic synergies, not necessarily core revenue scale, because there's a lot of cross-pollination in a super app where your customers can buy Fisdom's products and vice versa. So good story after all. This is exactly what you want to see in a robust ecosystem. Companies that can build with relatively little capital to profitability and then command a nice premium and get tucked into a large unicorn, which is trying to build more adjacencies and economies of scope for its customers.